It's World Cup, Men's World Cup next year.
Thank you. Great. Welcome back to those viewing online. We now continue to agenda item number 7, the Pension Fund Administration update, please.
Thanks, Chair. Hi, everyone. David Hodgson's, I don't know this morning, Pensions Manager, joined Ealing on the 2nd of June, so nearly coming up to 2 months. Been made to feel very welcome. Good to meet the board earlier on, and great to meet you all today as well. I'll just go through a bit of a high-level overview and just pull out some key points on the LPPA's administration update. Just want to highlight initially a couple of the key projects ongoing at the moment with the McCloud Remedy and Pensions Dashboard. So the latest update on the McCloud Remedy for the LPPA is that calculations are being applied, and the early results show a small benefit for members that the underpin does kick in, around £280 a year, and it roughly equates to about 4.5% of cases. Next steps for them are ensuring the information is ready for the annual benefit statements ahead of the end of August deadline, and recent discussions with them, they are on track for that deadline as well, which is great. Secondly, on the pensions dashboard, again, some of you may already be aware that the public sector schemes must connect by the 31st of October this year, and again, they are on track with that. They do have a full-time project manager in place, and again, good communication coming from that on that. So yeah, the latest status is they are on track for that too. Moving through into a bit more detail on some of the key highlights in here is your strong SLA, and I know in previous there's been concerns whether we agree with that SLA. From my view, you know, currently monitoring a number of cases from an end-to-end process to kind of get a feel for what confidence we can have behind some of these figures. Initially, you know, I've coming in with fresh eyes. I can see there's room for improvements here. Currently, kind of my key focuses will be on looking into the engagement around the retirement notifications. Look at ways we can promote their online portal as well to streamline some of their communications as well, and then obviously maintain oversight on McCloud dashboards and the creation of the annual benefit statements. Happy to take any questions.
Sorry, do you mind switching Matt?
Oh, sorry.
No worries. Thank you, and welcome again to Ealing. Any questions from members?
Can I ask, do we no longer have a union representative on? No, I mean, we used to always have, and this is their favourite. Oh, no, because normally he asks questions about, I just thought, where was he? Oh.
No, he said, earlier when we started, he sent his apologies. Yeah.
Sorry.
Yes, Councillor.
I mean, I'm happy to make a comment, which is that the percentages satisfaction, etc., seem to have improved since like maybe this time last year, when I know they were going through some issues, and I know they've moved over to some new software and stuff, haven't they? So it appears that they've ironed that out. Is that what you're finding yourself?
Yeah, I haven't yet gone back and looked at, so yeah, I'll take that point away and I'll look into that a bit more detail. Maybe next time do a bit of a year-to-year comparison. But certainly I've met with them a couple of times now. Seems very positive. You know, maybe next time I'll go into a bit more detail about some of the changes that are on coming up, you know, down the line. But yeah, early engagement with them is good, and look to sort of continue to build up that strong relationship with them.
Any other questions? Nope. Well, thank you, David. So yeah, the next agenda item, the pension fund performance monitor update for quarter ended 31st of March 2025. Bridget, over to you.
Okay, thank you. This is the standard fund performance report. The fund value did drop between 31st of March and 2025 and 31st of December. Some of that drop was in anticipation of Liberation Day, which took place in 2nd of April. But people in anticipation of that, the markets were dropping considerably at that time. They did recover subsequently. So by the next quarter, you'll find that things had recovered. Updating you on Loughbury, I've just said Loughbury, that fund closed. They are selling down the assets. I think we have about 7 million left out of just over 30 million invested in Loughbury. We'll have to try and find a home for that. Hermes is another fund that had some problems, largely because of a big redemption request, which gave all other investors cause for concern. But they're now in sort of advanced stages of conversation with Legal and General Investment Management to merge with another fund. So far, all the investors are agreeing to those discussions, and hopefully this one will go through. I think this one is looking more likely to go through, unlike the Loughbury, which the merger didn't actually quite work. Updates on the Mansion House Accord and Fit for the Future consultation. So last time we had all responded to a Fit for the Future consultation, which the government issued on the LGPS, all around pooling and all around looking for local investments. There were a number of questions that they asked us, which we responded to. And to be frank, the government really sort of proceeded with doing what they wanted. I think largely one of the things that a lot of people had concerns about was the deadline, which was that we will have to pool all our assets by after the 31st of March 2026. One thing the government have moved back on is that you don't have to sell those assets. So for private markets assets, they realized that obviously if you sold that, you would be losing a lot of money. So they've now agreed that those assets will transfer to pool management. So there will be an overarching investment management agreement where you would still say, you'll be hearing IMAs. There'll be an overarching investment management agreement. So all of these investments we have will be under the auspices of the pool. They would be the one making decisions about whether to top up, whether to sell, whether to buy, and what investments to make. We would be making strategic asset allocation decisions. They will be giving us that strategic asset allocation decisions. We can get secondary advice from somebody else, maybe to challenge that advice that we're getting, but we will take primary investment advice from the pool. The pool currently does not have the skill set to provide investment advice, particularly for 32 funds. So what they're doing is they're working to try and get a strategic partner to be able to provide that advice for us. So at the moment, I think they're in the final stages. They're down to 2. I don't know if your company is part of it. You won't be telling me anyway, or you probably won't know. But they're down to 2 advisors who are going to provide that strategic advice for them. And then in turn, we would be getting that advice. The other thing that we had pushed for is whether we invest in whether we invest actively or passively. Actively is where you invest in a manager. So say, for example, your equity investments, you will invest in a manager who is trying to do lots and lots of research, trying to outperform the market, find the edge, and then get a better return for you, but you'll be paying a lot more money for that. Now, the reality, and I think I can say this with lots of experience, is that it's very, very difficult today for managers to find the edge. One, markets are so well researched, everyone has the information. Two, markets are very, very event driven. So Liberation Day, markets fall, something else happens, markets rise. They just seem to move without really looking at the fundamentals of the company. So regardless of whether a company is doing really well, I think he talked about one listed company they had where the market is not recognizing it. So the pricing is not reflective of the fundamentals. So those active managers are not doing well. When they do well, they do say it's skill. When they do badly, it's something else. But the reality is that over the years, you'll find that even if you've done well for 10 years, you can write it all off in 1 year. And you've paid a lot of fees for that. Whereas if you're invested in a passive manager, you're moving with the markets up and down. In our case, we are invested passively, but we're invested in what you call enhanced passive funds, which are funds where the manager would be investing in an index that has been cleaned a little bit so that you might not be invested in as many sort of carbon companies or as many risky companies. So they will sort of clean the index so that it's still getting the return of the conventional market index, but it's cleaner. So that's where we are. Slightly more expensive than a straightforward passive management. But one of the things we'd want to be doing is looking at where we are with the active and passive managers before pooling. But we do have sadly one active manager that's basically, for some people who had been invested for a very long period, they've written down all of the gains in a very short space of time. So that's one of the things we'll be looking at. The other thing that the consultation did say is that we need to have 5% in local investments. And one thing that a lot of people thought local will be all of UK, but the government has come back and said local is your local area. So for London, that would be London. I can see why they've done that, because if they said local was the whole of UK, every fund will say, well, we've got more than 5% in the whole of UK, job done, tick. So by saying local is local, it means all of London have to get together somehow and come up with schemes that are local to London. It's going to be interesting how the pool do this, because obviously they have to somehow get from 32 boroughs who would all be coming up with schemes that they want in their backyard. And how do they go through the process of distilling all of these proposals into the 5% that they're going to put in investment? So that's a job for the London CIV to determine. The other thing they have said is that we're going to be responsible for our responsible investment ambition, if you like. But the pool have 32 boroughs and they're not going to come up with 32 different responsible investment ideas. So what they're going to do is give up a matrix with maybe 3 or 4 consensus buckets, and we would have to choose where we sit within that consensus bucket. So at the moment, they're still trying to have meetings to discuss how to come up with this matrix. So that's something that they're working on. But the bottom line is that pooling is here to stay. There is a bill that's working its way through Parliament. And basically, the bill is that you should pool, and the government has this sort of backstop power to force anyone who's not pooling to pool. And that bill is working its way through. So that's where we are with the Mansion House Accord. Really, the Mansion House Accord really is to get lots more pension money into the UK, and they're going to be looking at private sector pensions further down the road. But at the moment, the focus is on the LGPS. As you know, there have been 8 pools across the UK. I think a lot of the pools were set up about 10 years ago. After London set up its own pool, the government said it's wonderful. We want 8 pools across the country. We've got 8 pools, but sadly, the government has decided that 2 pools are not fit for the future. and those pools have now been closed. So there's about 20 orphaned funds who are now looking for both a pool and to pool by the 31st of March. I think they might have dispensation to have a longer time scale, but at the moment, you know, basically they have to look for a home. London CIV is probably very busy with 32 funds. I don't know if they will be taking on any of those funds, but I think at the moment they're all sort of having conversations with the various pools to see where they will end up. But that's where we are with the consultation and the Fit for the Future. Otherwise, the only other thing is to say we agreed the top up of one of our private debt managers. That's proceeding. Some time ago, we agreed that we were going to move. So this is talking about the passive fund. We're going to move our legal and general investment management from one passive fund on the advice of our advisors into a Paris aligned passive fund. So it's a passive fund that is naturally decarbonizing. So we couldn't do that until this month because they were doing some amendments to the structure of that fund. That's now complete. So we will be migrating into that Paris aligned, naturally decarbonizing fund. And then the other thing is to approve the investment strategy statement. And I think unless you have questions, that is this report in a nutshell.
Oh, sorry. You can update me on what's happened to those authorities in London who wouldn't put their money in the pools. So has the government come down on them? Because they, excuse me, before, I don't mind saying because it's nothing secret. Kensington, Chelsea, and other authorities. There's about 2 in others in other parts.
So at the moment, I think those authorities are now sort of on with the pooling agenda. So I think we're not having any problems. They're signing, you know, the agreements that are sent through. We're all working together in unity. So I think at the moment that's going to happen. No problems.
No other questions? Yep, Councillor Seed.
Thank you. Brilliant. Just to give me a update since I was last on the panel. So I mean, don't worry, no, we haven't got that long. But I mean, I think from distant memory, we began talking about pooling back in whenever it was, 2018, whatever it was, and here we are now. So I mean, the bottom line is basically we will have less direct control over our pension investments.
Yeah, you will set the strategy 3 years and very high level strategy. So you're not going into, you might, I mean, the bucket might be you want so much in return seeking assets, you want so much in income, and you want this return, and the pool will go and invest for you. You will not be making any decisions around that. You can hold them to account, you know, at the end of the year or end of 3 years, you know, why haven't we achieved what you set out to do? But it's early days, and we'll see. Every pool will probably work differently, and we'll see how much leeway they're giving us.
Thank you. Well, agenda item 9, if there's anything further you wanted to add.
Under agenda item 8, I can't present the document because it's in private, but in the last meeting we had a quite substantial conversation about the investment strategy statement and responsible investment. The investment strategy statement in your pack reflects all of the discussions that you've had. We're not asking for a discussion of that document now because it's in private, but just if you've got any final comments, feed them back to Bridget, and that will become the investment strategy statement for the pension fund and go up onto the website. But it's a complete document based on the discussions at the last meeting.
So if members can any comments, any questions direct them to Bridget separately before that is finalised. That would be great. Great. Well, thank you very much. Oh no.
Just to clarify, agenda item 9, just to approve the
Oh, yeah.
investments, the top up. Sorry, just let's go through agenda item 9. I think it's just approving that investment. I think or acknowledging. So yeah, I think that's all there was. Agenda item 9.
Yeah, can we? Yeah, agrees. Is everyone agrees to that? Okay, that's great. Right. In that case, any other comments? Any other questions? The next meeting is. Please look online for the next date of the meeting.
The 10th of is the 10th of September. It's a very short time scale.
It's a change of how. Okay.
In that case, thank you very much. Close the meeting and look forward to meeting at the next session at some point. Thank you.